Daljeet Kohli is here with us to talk about markets. Daljeet, of course, has a very old hand in the market, has found several multi-baggers. So, stock access, what is your on your radar, Daljeet, right now for potential multi-baggers? What areas are you researching? I'm not sure whether you can talk stocks, but you're actually a stock picker at heart, right? So, no point talking about general markets with you. Tell us areas of opportunity, Daljeet, where potential multi-baggers are taking shape.
Good afternoon, Ajay. Thank you so much for such kind introduction. Yes, we are looking for opportunities at this point of time in areas of industrials. So things like industrial automation, so stocks like ABB, Siemens, they are on our radar. Some of them are a part of our portfolio also. So disclosure is that whatever stock names I take in this interaction, I am not holding any one of them, but we have recommended them in our various portfolios. So our clients, associates, management may be holding these stocks. So the ABB Honeywell Automation is another one which we like. Amongst the agro theme or related to infrastructure, we'll say KSB pumps. So that's one which we have been liking for quite some time. So there are few opportunities in this industrial segment. Then in autos, we are playing through electric vehicle theme. So there we have two stocks in our portfolios, Sona Comstar and Minda Industries. Uh, IT, we are quite bullish, been bullish for quite some time now, and mid and small cap, large cap across all the spectrum. But within the mid cap, we have been holding for a very long time KPIT. We have just added Birlasoft 2 3 days back. So these are the few opportunities that we are looking for. It's across the sectors, across the market caps. The theme is basically that this is the note which I wrote in the month of December, early part of the December, that we are looking for reducing our exposure from those sectors which have seen a huge run up in the last 1.5 years, where the valuation multiples have already re-rated. So even though the growth and view may not be negative, those like specialty chemical is one segment where view is not negative, but the 60-80 P multiples which have already happened, now further re-rating is not possible there, and earnings growth will probably decelerate from here, or if not decelerate, it will stop. So that will mean that stocks will not perform from here onwards. So we
Fair
have to look
point.
for
You've
newer
given us quite a lot
opportunities
of
where
meat.
earnings
Let's talk
re-rating.
about capital goods. Capital goods may be a vehicle of capital expenditure in the country, and hence you like it clearly. But if one were to look at the three stocks which you've spoken about, Honeywell Automation, ABB, Siemens, what kind of valuations are they trading at right now? What's the right way to analyze valuations? And say 2 years far out, where do you see the earnings landing up? What
Yes.
is there a case for PE expansion and earnings growth coming there? Tell us a little more about capital good plays of yours.
Yes. So see, at this point of time, because their E was depressed, earnings have been depressed for last many years. Most of these capital growth companies, actually from 2014 onwards, they have not done much, and 2017-18 actually nothing. So when the earnings itself is depressed, obviously P multiple will look very big. But if we look for, as you rightly pointed, we should look for next 2 years, next 5 years, what is going to be the situation. And just before the start of this session, you were only alluding to what Mr. Gadkari was talking about. So if that is the kind of thinking and that's the kind of support which is coming from government expenditure, then I think that there is a huge potential. All these companies now, when we are interacting with all of these companies, they are telling us that order books are again started bulging up. They are all getting good inflow of orders, which will be executed in next 18 to 24 months. So we are easily expecting 25 to 30% growth in earnings for most of these companies. Very easily possible, if just because of the execution and the order book in hand. Now, re-rating or will happen probably when market will start getting the visibility of these numbers. Oh, everybody is positive on infrastructure for quite some time, but there was no visibility on numbers. So I think once these quarterly
Right,
numbers
fair
start
point.
coming,
What's your 2022 outlook, Daljit? Do you think that on aggregate, markets will give positive returns to investors, or after 2 very good years, we should also be ready to, take with both hands some sideways consolidation of the market, a few months, couple of months, maybe a full year?
Yes, so on broad markets, I would say that as a whole aggregate market, if you talk, probably my view is that it will be very difficult to make money in the next year. The easy part is over for last 2 years, so next year will be very difficult. But to say that it will not give positive returns, I think that is too pessimistic. I'm not that pessimistic. I think we will still make up 8-10% easily. For stock pickers like us, there is always a opportunity. So we will always be outperforming the market because we will be able to find certain good stocks which will perform much better than the market. So I guess stock pickers, good quality stocks, fundamentally strong stocks, where pockets of opportunities, they will give much better returns. Aggregate index wise, yes, probably double digit will be difficult. Maybe 8 to 10% one should expect.
Daljeet, your model portfolio, which you have constructed right now at Stock Access, how does the earnings growth of your model portfolio look like if one were to talk about, say, the next 2 years far out?
So we follow Miller's is our flagship product, which is Miller's is an acronym for market. M is for market direction, I is for industry ranking, L is for leadership, A is for acceleration in earnings, R is relative strength, and S is self-discipline. So basically, here we are talking of acceleration in earnings. Basically, this portfolio is designed on the Slim model, William O'Neill's Slim model. So it's based on that basis. We have designed this for our requirements, and we believe that the earnings growth definitely is the fundamental reason for any stock to perform. So our stocks in our portfolio, like IT, we talk, they will give definitely more than 25% return. We are looking for villas of kind of thing, profit of almost 1,000 crore next by FY24 or 20, at the most by 25, if not 24. Same way, Sonacom is doing 20-40% kind of growth there. Siemens in ABB, because these are bigger companies, so they will probably show 15% to 20% kind of growth. So approximately 25 to 40% kind of growth is easily possible in most of the stocks.
Right. Well, last question before we let you go, try to understand what about the small cap and mid cap end of the market? How's that pocket looking to you? Is it frothy, or with the correction has value started emerging there? And any interesting theme you can leave us with for our viewers in the small cap, mid cap? Because small cap, mid cap lovers, no matter what you tell them about large cap, they want to find their own set of the next small cap, mid cap potential multi-baggers. Leave us with some data.
Yes. So see, small cap and cap is actually a misnomer. It's such a big set that most of the companies are totally different from each other. So it's a very heterogeneous subset. It's wrong to say that small cap as a whole will not perform. Within a small cap, there will be 5 companies which will perform, and we need only one. We don't need 50. We don't need 100. Right. So in our portfolio, like Miller's, we said this is sector agnostic. This is market cap agnostic. So there are companies which are large caps like Bajaj Finance. There are TCSs of the world. There are small companies like Sona and even this Villasoft and all of these kind of companies. So we are looking at across the spectrum. And I think within the smaller mid cap, there are a lot of opportunities. So theme would be the same, which the sectors which are performing. So out of that, you have to find. So if I have to play auto theme or EV theme, I will not go for Tata Motors. I would rather go for a Sonacom Star kind of company or a Minda kind of company. Right. So that way you will find some opportunities in the middle stock.
Right. All right, Daljeet, always enjoy our chat. Thanks so much for your time. We'll catch you again, perhaps next time on 18 of Swadesh. Thanks. Short break here. On the